Good morning, everybody, and this is your Dow Jones setups for today. So pretty much all over the place again, and this area where we are right now, and we spoke about this in Friday's session, but that kind of your pivotal point or line in sand, and you can see we're below the moving averages, haven't got a crossover, but 38,800 area is the line in the sand. If you just look left, you can see it's been a strong area of support, and it could be a strong area of resistance as well. So for now, this is sideways. If you just go through the daily time frame, big engulfing bar with follow through, and below the 80 with a crossover. Trend is still up, granted, and we've got this little trend line that we're bouncing off at the moment, but everything's looking a little bit tired, so I really would prefer a deeper pullback. And when you start looking at the weekly, that's quite a big rejection tail there, although buyers are still coming in off the bottom here. We do have a little crossover starting, and price doesn't move in one direction like this. Has to come back, and the logical choice on the weekly would be, you'd be waiting down here to add to your portfolios, or to invest more money in the stock market. So you'd want to see a deeper pullback at cheaper price in order for you to get in. So at the moment, we look at it on the 8-hour, we kind of sideways, just hanging around in that zone. If we come down to the 3-hour, big up, big down, big confusion, crossover of the moving averages and below the 150 EMA. So 38,836 is one of the key areas to be paying attention to. Now, you do have this diagonal which we bounced off, and I'm going to leave that in for now because it is going to come into play. And when you get to the hour, you'll see what I'm talking about. So let's just run through the logic first. So Thursday, news driven, big moves to the downside, back into the zone. Buyers tried to come out. We then rallied ever so slightly just to test this pin bar. That was your shorting opportunity below the moving averages, and you can see how it played out. And straight back onto the zone that we're looking at, and buyers tried to come in, and we got below it. So this zone is very much still in play, and you can probably just add a couple more levels, and I'll give those levels to you shortly on the 15-minute, because 15 minutes first going to show you that there was actually a fairly decent trade to the downside. So that was the swing low, and no real thing else. Let's put that bit of structure in and see what that does. Okay, so that's what we went for. So remember, we always say put 3 levels in. So that's your first swing low, which is 39,007, and then just above it, I mean, it's not really, just a little engulfing bar there, and that was 39,029, and that's kind of what we went for. We aimed for that, but it doesn't matter really, because this pin bar here is also, you didn't quite get follow through on it, but you could have still got in there. It's a 100-point stop loss. Top of this pin bar would have been your stop loss. So you can see a fairly strong zone. You definitely know something's going to happen there. It did move to the downside and then immediately tried to come back, and then the second move happened. So this would have been a bit of a panic moment, but nevertheless, this was 39,007, 39,029, and then this little rejection here was the next one, which is 38,920 and 38,892. So below the 150 EMA, defended the 150 EMA, and the minute it break like this, your next retest was pretty much a guaranteed trade, which would be in this one here. Quite late in the session, but definitely there onto the trend line, and then a little bit of a bounce. So levels for today are as follows. 38,836. This one is also going to come to play, 38,777. So those are the two key levels at the moment. And I think it would be wise to just put this pin bar in here at 38,736. Because you'd have to get below that, but remember you've got your trend line here. So I'd be very reluctant to be taking shorts off this this area where we are here. There's just too much diagonal and horizontal support here. So this one is actually looking like a leave me alone type situation, because there's a lot of confusing stuff. You've got some potential long setups brewing, and then you've also got some potential short setups brewing, but you've got a strong level of support below us, and it's a Monday. So we're going to need some catalyst to drive us through that level of support. I don't think you're going to get that on a Monday. So yeah, I think this to me is a sit on hands. Definitely stay away from this and the DAX. The S&P's got a little opportunity for a little short scalp onto structure. But after that, I would take profit and sit and wait. So for me at the moment, the bigger picture here is sideways, and look at with all those levels drawn in, just look at the chaos, what that means. So this is a strong area of potential support. We start dropping below the lows of last week, which is at 38,526. Then the story changes completely, because then it opens up quite a bit of structure to the downside. But we'd need to break through that, and could be a double top, but double top only comes into play with the break below 38,466. And if you look at where the oscillators are at the moment, this could just be coming back into an area for support for another attempt up. So in other words, trying to build a bigger range here. Very possible. So I think I would just be cautious and wait for better days. Wait for clear structure. There's no clear structure on the 50 minutes, and there's no clear structure on the hour. There's lots of berry structure here, but I would be very reluctant to chase that. I think if you do get back up to 38,900 and you reject that, that would be a fairly decent area for a short back onto this diagonal support. But for now, I'm not interested in shorting where we are now, and I'm not interested in going long either. So it is sit on hands. Anyway, hope it helps you somewhat, and we will catch up with you tomorrow morning. Cheers for now.